Hello, Anthony.
Hello, Claudine.
We are talking today about unpaid tax bills and if someone could be liable for an unpaid tax bill that technically isn't theirs.
No, that's got to be impossible, right?
That's impossible.
That's impossible. You could never be liable for someone else's unpaid tax bills, right?
Nope. When it comes to businesses, especially. Yes.
What are you talking about?
So say you're an employer.
Okay.
You're paying your employees. They're getting their paychecks.
Yep.
But you don't make the deposits for the employees' withholdings.
Wait a second. But it says it on the check.
It's right on the pay
I'm
stub.
looking at the pay stub. It says withholding and my net pay. So what's going with the rest of my money?
Well, it depends.
Yeah?
It could be, un-PC term, let's say a secretary taking the money to buy cars and mink coats.
Oh.
Or it could be, and this happens more often that we see, where they need that money to continue growing the business.
Yeah.
It's sort of like, we'll pay it next week, we'll pay it next quarter, we'll pay it, but we really need that money to bring in more stock.
Yeah, and in all honesty, that's usually what's going on. A business is hurting cash flow, and it's sort of the loan you take from Uncle Sam.
Yes.
You're guaranteed approval. The interest rates are a little bit high, and there's some penalties that are horrific, and a lot of companies get into trouble there.
Yeah. Now, 2 instances we know you could be held liable for these taxes.
Yep.
So the revenue officer comes in and tries to see who's the responsible person for paying these taxes.
Right.
And how do they deem that?
Well, it doesn't go necessarily who the owner is, but rather who is the person who has control. Who's the person who's responsible for it? Who's the one who says where the money goes? Now, in practice, this is sort of what I see, is there's sort of this unofficial code. Just check to see who's on the signatory for the bank account.
Oh.
That fact is like the big fact that a revenue officer will hang their hat on to assess, okay, whoever's on that, I'm going to deem. Now, a lot of times, the revenue officers want to put as many people liable for as possible, maximizes their chances of repayment. Mm-hmm. It's not, once it's paid by one person, they're not going to collect multiple times. And there's really the big problem there. And a lot of times you can have a conflict of interest. The business owner will hire the attorney. Hey, guys, I hired this attorney to help us out with this payroll tax liability. Yeah, well, I'll just say we're responsible.
Oh.
Ooh, yeah. Whereas the business owner is trying to get other people on the hook for it. So that's something to really watch out for. So before you agree to be liable for somebody, make sure that you get your own legal opinion to see really if you are. And actually, we've had cases where even we've been able to get the business owner not liable for those taxes personally because an employee embezzled the money.
And I would say, too, that having signatory authority isn't a nail in the coffin, but you do have to be able to prove without a shadow of a doubt to the IRS that you were not the one calling the shots. So you got to make sure your ducks are in a row there. The other instance we can see where you might be liable for paying someone else's taxes in the business is if you're married to the employer and you filed jointly with the employer.
Yeah.
And this one I think sort of sucks because even if you didn't know there was unpaid taxes.
You had no control over the business. You didn't know. And now all of a sudden they come because you filed joint and this liability now shows up on your account transcript. And, let's say for something, even, something a spouse passes away. Mm-hmm. His business wasn't going well. And he took out loans, was overextended, ran up a huge liability, passed away, not a lot of money left. And now the IRS is coming after you for your dead husband's bills. And he had a rough life. And so that can happen. There should be an easy fix for this. Unfortunately, not. You need to get a lawyer to make some legal claims to say, hey, I should be entitled to some sort of relief.
Yes.
Now, sometimes you're still married. That happens.
Mm-hmm.
And sometimes the spouse might not be telling you. And I actually did have one case, which is more like the first case where the IRS deemed, where the revenue officer, husband and wife, supposedly owned a business together. Mm-hmm. Okay. And so the husband and wife showed up for the interview by the revenue officer to be assessed the trust fund penalty. Okay. So the revenue officer looking, okay, Mr. and Mr. Taxpayer, okay, let's sign this. So do you agree that you owe the tax, Mrs. Taxpayer? Oh, yes, I called the shots. Except that wasn't the spouse. That was the girlfriend.
Oh, my gosh.
Yes, that does happen.
Ooh.
So that's happened sometimes. We're like, well, why did you assess this? You didn't even assess it. You never even interviewed the taxpayer. Oh, yes, we did.
Oh my gosh.
Can you describe what she looked like?
That's crazy. Another good instance where you definitely want a good lawyer. They can put liens and levies on your account, even if you didn't know about it.
Right.
And like you said, with the innocent spouse, you don't have to be divorced. Some people think you have to be divorced.
Right. There's some relief available without being divorced. Being separated certainly helps. Being divorced helps too. But
and
you don't necessarily need to be.
You can't just amend your returns to go from filing jointly to filing separately.
I know, that would be such an easy fix too. Here it is. So here, guaranteed. But that is a weird one that they just don't allow, because you can go from separate to joint, but you can't go joint to separate.
Yep.
So that would be one easy fix if they just allowed that.
And then what about an offer in compromise? Is that an option?
Well, it is. But, the downside is if you have assets and income, well, the IRS is going to want a taste of it. They're going to say, okay, well, you got to give us something of that. So it's going to cost you if you have it. If you're dead broke, okay, sure, they'll take a nominal offer. But if you're making some money, if you're having some assets you're trying to protect, like let's say a divorce did occur, now you have the marital home. The IRS is like, okay, refinance that and pay us off. So it really kind of sucks. So if we can get that liability gone before we agree to say, yeah, the liabilities exist, we just can't pay them for it in full, that's always better.
Got it. All right. Well, if you're having any sort of tax issues, payroll issues, trust fund issues, don't hesitate to contact us, 888-727-8796. You can also email us, info@irsmedic.com. If you want more information about our products and services, visit irsmedic.com and also watch some more videos on our YouTube channel. You can like and comment below, and don't forget to subscribe. Thanks for watching. IRSMedic, the law offices of Parent & Parent, LLP. Real tax attorneys for tough tax problems.